In this video, I will discuss my year of 2018 portfolio coming up. Hey, what's up? Tim with Quantum Financial, bringing you the best investments, helping you make most of your money grow and outlive your lifestyle with a focused approach. On this show, we do a lot of business news along with strategies and stocks, just like this one. So if you're new here, think about subscribing. Today, I am going to walk through my whole portfolio for 2018. So let's get going on my stock portfolio. Here you will see that the S&P 500 made a gain of 230 points, percentage of 10.10% this year. It started out end of 2017 at 2275.2. It ended today at 2505.2. Difference of 230 points. I, on the other hand, grew quite a lot. I went from $1,584.47 to $19,206.64, and that in turn brings a profit of 1,112.18%. Not so shabby, I don't think, huh? Let's switch on over to the board here, and I will show you the stocks that I own, and we will go through step by step, line by line with you. First on the list is Nokia. NOK symbol. You will see that I bought shares back in January all the way through the whole year. They pay a dividend, and you will see on this one right here that they paid a nice dividend, and with taxes and everything, I came out ahead at $9.79 on that one for Nokia. And Nokia is a technology company. Next up is Taiwan Semiconductors. I bought in many shares for the whole year, and they also pay a dividend as well, as you can tell there. And Taiwan paid me $7.25 over the whole entire year. Here you will see Taiwan you will see here a Southern Company. If anybody knows Southern Company, they are a public utility company. They pay a wonderful dividend. And you can tell that over here, over the total of Southern Company, they paid me $30.60 for the year. Next up is Dominion Energy. They are a public utility energy company as well. And you can tell here that they also paid me over $30.06 for dividends for a year. Next up is another energy company, Clearway Energy. Down in the bottom you will see a name change. It was at one time another company. I don't recall, I forgot what it was. It's been a long year, but they transferred all my shares I had over with them and continue to buy shares with them as you go down. And the bottom line is, when the stocks go down, you buy more. It's a dollar cost average. And they paid me $15.89 for dividends for the year. Not too impressive by holding on stocks. That's what a dividend portfolio is. Let's keep going with Southern Gas. They are another public utility company, which is out in California. They supply gas for California, Nevada, and Arizona. They also pay dividend, but yes, they are quite expensive, but well worth the investment. They pay me $7.80. Sunco is another energy company. They supply gas to gas stations out on the East Coast, and they own many refineries, and they as well pay wonderful dividends, and I got a dividend of $34.67 this year. I plan on buying more along with the rest of them that I show you. Here's Vail as a mining company. They pay me $8.45 for the year. As you can see, little by little, each time that I buy in, I get more dividend profits back from the company each and every quarter that they pay. Next, we're going to go to real estate companies now. I own 3 companies in the real estate business. I own Whitestone. They are a hotel chain that owns big conglomerate hotels around the country. They pay 0.095, almost 10 cents per share, and they have always paid dividends, never have gone without, and they pay me $21.95 for the year. Here's Whitestone Tree. It's a ex-US real estate, and they invest in only foreign stocks in different countries, not in the United States whatsoever. They pay me $9.19. Last one on the list is Apple Hospitality. As you can see here, they pay me $16.30 for that one as well. And then now we're going to head over to the healthcare sector. AstraZeneca, which in my mind I think is a really good solid company. They got a lot of good drugs coming down the pipeline and many more to come, and they are really cheap right now. I am going to buy or try to concentrate on buying more shares of them in 2019. And they pay me $3.52 because I don't have very many shares in that company just yet. Now we got next healthcare sector is Novartis Healthcare. They pay me $2.49 for dividends for the year, and they are not a cheap stock at all, in the high 80s. So if you have the money, I would buy into these, but I wouldn't keep jumping on it. But with any real estate company that you buy, you are taking risk, but down the road you will gain most of it all back and then some. So keep that in mind when that does happen. Next one on the list is Cardinal Health. They supply tools and all kinds of supplies to hospitals and doctors. They are really cheap. They were in the high 60s early this year, and now they have declined down in the 40s. And they also paid me a nice dividend as well. Johnson Control is an Israel company. They make all kinds of stuff from batteries to all kinds of other sort of things here. And they as well, they pay me $8.32 for dividends, and they are a consumer service company. And here comes number McDonald's on the list. They are a consumer services as well. I don't have very many shares in them yet, but they did pay me quite well of $19.53 for my little 9 shares that I own of them. And then of course you can't leave out Mr. Starbucks. I have to have them in there too. And I plan on buying more of Starbucks next year. They pay me an even $12 for the year just by holding on to the shares. Then we got a banking company, Westpac. They are Australian banking corporation. They have been hammered hard this year, but I'm still believing in the banking sector. I don't have very many bank stocks, only this one, and they pay me $4.81 for the year. I just started picking up Ford in December. So I'm very happy of what has accomplished with Ford, and they pay a nice one-time dividend every March. So I have like 66 shares so far. Then we got Sun Life Financials. Okay, make that 2 banks I have. This one is a Canadian bank. They pay a nice dividend. They pay me $9.11 for a year. And they are a good, I would say, a good stock to start buying yet in the 40s. Definitely believe in this stock. Next one is iShare JP Morgan. It's a bonds, and bonds are like a little security nest egg. You should always have a little bonds in your portfolio, just in case weathers or whatever. It's just a little safe haven. It's kind of like gold, but I don't put a lot of money in it. I had like 12 shares of that company this year. So my total dividends that I got for this year were $255.46. I want to address that one more thing here before we leave, that a Roth IRA is a tax-free account that everyone should get into and put as much as you can in it, the maximum allowed. In 2018 it was $5,500, and next year in 2019 be the first time ever that we're getting a raise in like 5 or 6 years, so that's bumping up to $6,000 next year. And you want to keep pressing on and getting that Roth in there first. That's a tax-free. You don't have to pay taxes ever because you already paid the taxes. It's already after taxes. I also have a individual account as well, and I also have a Roth 401k at work as well. So you want to put all your money to work in all different places. So I hope this has encouraged you to be an investor and start out slow and steady. And you will too have a nice portfolio and will build wealth over time by being a dividend investor like I am. It's easy, it's fun. Just sit back and when stocks go down, you want to buy more shares, and you're happy when the stock goes down because you're buying more at a cheaper price than if you would at a higher price. And on that note, I want to say thank you everybody who has visited my channel and commented and liked. And I hope this is inspiring to you. So until next video, have a great day. Bye-bye.